Hi everyone. So markets did end up continuing to this swing low. I added a level here at 603.25. Continues to hold as support over the last couple days. Is it going to bounce again? Are we going to get the continuation back up to upper levels? Let's take a look at all of the charts and see if we can find some direction. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Looking at the Fear and Greed Index, we were flat on the day at a 51. We saw momentum kind of pull back a little bit, but still hovering in greed. Strength continues to move lower. We've been talking about this extreme fear now on strength and breadth as breadth goes negative here below that 1,000 level. We'll continue to watch that. We've been talking about it for a while. Put call ratio still hovering, saw a slight step up, not much of anything there. Volatility rising as we get closer to that FOMC, and then safe haven demand pulling back into neutral, and then junk bonds, extreme greed at a very, very low level as we get close to that rate cut. I think this is really just pricing in the rate cut, but the biggest concern for me is the extreme fear on strength and breadth. And then another piece of data I wanted to highlight here is this is 11 days with negative breadth. You can see a couple of different signals here that I pulled from Sentiment Trader. Over the next week, 2 weeks, and 1 month, nearly all negative 1%, 2.1, and nearly 2.5% here. 2 months still relatively negative at 2.2, and then 3 to 6 months later and out to 12, that's when you start to see positive numbers. Not a lot, 1%, 1%, and then a year is 11% out there. But in the short term, week, 2 weeks, 1 month, relatively negative, not very likely to be positive from here. And you can see those indicators on the charts. A couple of them did turn out positive for a little bit, going negative ultimately. Just something to keep in the back of your mind. Even if we do end up breaking higher, we'll probably see some negative choppy action into the early parts of next year. Looking at the economic calendar, core retail sales came in a little weak, 0.2 versus the 0.4 expectations. You can see a couple of red numbers there. Headline retail sales a little better at 0.7 versus 0.6, and you can see both of the previous numbers were also revised up, so that's relatively good as well. 20-year bond auction continues to be flat. Makes sense. Atlanta Fed GDP, a little bit worse than expectation there. And then for tomorrow, obviously FOMC is going to be the biggest data. And then for Thursday, we get GDP numbers, Philly Fed manufacturing, existing home sales, and Fed balance sheet. So continuing to see lots of data this week. PCE price index is coming out on the Friday, which could potentially affect that next rate cut, even if it's not happening until March at this point. Moving over to Max Pain here, you can see Max Pain's at 583, current stock price 604. Really no change on the call and put walls, but total options moved down quite a bit to 3.6 million, down from I think 4.8 or so. You can see put call ratio 1.98. Either way, puts and calls 600. 605, somewhere in here makes sense. That's where we're sitting currently. Wouldn't shock me to see a push to 595 to 600, but either way, still holding in this kind of mid-range as we get closer to FOMC. And then moving over here to the charts, you can see we did gap down and doji in that choppy area. Momentum going back to bearish, RSI breaking back down. Momentum continuing to ramp on that selling action, 0.41 to the downside, 21 EMA, 601.04 in this zone here. You can see trend support in that same area. We extend that trend out, that should come up a little bit, but if this structure breaks, 55 EMA is your next zone in here at 588.62. That's really what I would be looking for once this structure breaks. And then looking at that hourly chart, we saw it on the intro, choppy action here. And putting those levels back on, you can see 603.25 is the level that I added. That continues to hold support over the Wednesday last week, Friday last week, and then you can see Tuesday session here holding support. A couple of touches starting to hold into the after hours. Big volume on the last candle of the day, slightly bullish there. So 607 would be your upside target. Momentum swinging to bullish. It does look a little bit short-term positive as that support continues to hold. And then, like I said, if this structure breaks here, it got trend support, and then that 599.64 level just below that. And then moving over to the Tasty charts here, you can see we continue to hold in that 89 EMA zone on the 4-hour chart. Currently sitting at 603.01. You can see ATR trailing stop there as well at 602.63. Lowest band target would be 600.71, and then just below that you got the 144 at 599.72, which would be pretty much in line with that level that we talked about on the previous chart. Again, volume ramping here. Interesting. in that zone of support. So right now, momentum is slightly bullish for me, continuing to show that consolidation. And then looking at the hourly chart here, you can see how this continues to chop between bullish and bearish conditions. Definitely sideways choppy action. We were bullish going into the 16th, and now you can see here on the 17th back to bearish conditions, hitting those lowest ATR bands, continuing to find support in there. The bands are currently trending lower, but you can see we've had that before. We trended lower, rallied right back to the top. If you do, your upper band target would be 607.66, pretty much in line with these wick highs that we've been seeing in here. So right now, sideways choppy action still on the hourly chart fits with what we saw before, and currently the 4-hour chart is showing a little bit of bullishness from this level as well. Moving over to the NASDAQ here on the daily chart, you can see inside candle, gap down and fell 0.44. Momentum continues to be kind of choppy here. We had a couple of bear days, a couple of bull days. We did go overbought conditions on Monday, pulled back just below it at 68.18 on the RSI, back below the trend line here, back in this mid zone. Last time we tested this, it was a fairly substantial move of about 3.75% down move there. We'll see if it ends up pulling back to the 21 EMA. Right now, that's pretty low from here, 517 or so. If we did get a pullback like that, pretty much in line with the previous move, 3.5% or so. We'll see. You have some trend support in here at about 534.58, pretty much right below the level there. And then looking at the short term, I did add those levels here. You can see 533.17, that is the wick high back from the Friday session, and then the wick low from the after hours session touched that level. You can see clear touch, got a little bit of a bounce from there. I have my alert here at 534.20. That was kind of the low of the midday session. Ended up seeing some bounces from there. Again, volume coming through, just like we saw on the SPY on the bullish sessions. Just looks like a very short-term pullback, kind of a bull flag type setup on the hourly. Every time we got fairly low, we ended up seeing some bullish action in there. Then you have the 21 EMA as your resistance, 536.62. If we pull back, test that level, and then sell, that's going to be bad. If we push through there back up to that 538.48 level, then we could see a break of these trends, or at least a test of the trends in here around that 540 area. That would be a kind of continuation style move, just like we saw here. Pull back in time, tested the levels, pushed to the trend, pulled back again, pushed to the trend. So we'll see. Right now, the NASDAQ continues to outperform. A little bit concerned about that inside candle off of the big bull day the previous day, but overall seems to be holding up fairly well. Moving over to that 4-hour chart on the Tasty charts, you can see we hit the upper band, pull back in time, just like we said, hit the upper band, pull back in time, right to that 8 EMA. We're technically a little bit below it, touched the midpoint here on that 10 o'clock candle. The candles are a little different here on the Tasty charts, but mid zone right now, 533. Want to see that area hold, kind of like we did in here. Dipped below it just briefly, but right in that ATR trailing stop zone, still bullish here with those trailing stops to the low side at 530.90. And then zooming into the hourly chart, you can see we did technically go to bearish conditions just briefly over the last couple of candles. We're still holding support in that 34 EMA area, 535.08 right now. You can see we're just above it, 535.13. Want to see that area hold and then push back up into this zone, upper ATR bands sitting at 540, pretty much in line with that previous target that we talked about, 539.90, 540, and that would put us back into bullish conditions. Current trailing stop 539.47 in that same area. So right at the previous highs, right in here that we've seen that pullback since then. Didn't see the same kind of volume spiking on the Qs that we did in the SPY, but overall, I still think this is a pullback in time, short-term pullback, looking for that next move higher here on the NASDAQ, especially as we continue to see these wicks to the downside getting bought up. Moving over to the Russell and the Dow, again, negative days here, 1.4 and 0.64%. Broke the level on the Russell, 232.09, right in that 231 area, kind of in this wick high zone. So we filled the gap going back to that Wednesday session. We talked about how that was probably going to happen after we got into this area here. So we got the gap fill. Hopefully that gives us the ability to find a bottom in here soon. We're very, very close to that 55 EMA at 299.01 and then my level 299.18. Because we're only about $2 off of it, my guess is we'll probably see a touch there. RSI still bearish, momentum still bearish. Everything looks kind of weak in here. So again, probably 1.5% lower into the zone. Catch some wicks in the zone on the trend. That's a little bit lower, 228.69. Want to see this area hold. If this goes, then we're probably going to see a more medium to longer term more medium-term pullback into this zone all the way back in the 213, 214 area with the 200 SMA sitting there, 213.59. So that's the big concern. Is this critical zone here going to hold as we head into FOMC, or is it going to break through here and push back to these medium-term trends in there? And then looking at the Dow, I saw a stat here that this is the first time the Dow has gone negative 9 days in a row since like the 1979 time period. So Dow definitely pulling back. You can see the gap in doji to the trend. Trend continues to be relevant. 55 EMA, again, dangerously close there, 433.46. Then my level 432.78. I think we just barely missed the gap fill here as well. Closing price was 434.29, and then the low for the day was 434.43. So just missed that gap fill here on the Dow. So my guess is we touch that at least tomorrow. And then looking at the MACD, still very bearish, continuing to grow bearish there. And then RSI still very low as well at a 41.75, getting pretty close to those oversold conditions. Volume continuing to ramp there. Trend support, I could see buyers coming in here. This trend was relevant here, caught a bounce from that level and then continued higher. But 9 days in a row, you don't see it very often. We'll see if it continues lower into the zone here or if we start to see a bounce back up to the trends in that 455.41 area. Moving over to the Mag 7, you can see we hit that first trend line finally on the wick high at that 341.61 level. We'll see momentum starting to step down a little bit, still super overbought at an 80.83. You still have this upper trend here at about 347.78. Tesla continuing to carry the Mag 7 despite NVIDIA starting to sell off even more. You still got Apple and Microsoft doing well. We'll take a look at all of them, but right now, slightly bullish, 0.55 on the day, doji, so you have the potential now for a gap up, gap down. If you see that, we're probably pulling back here to the 328 level, and then you have some lower trends that will extend out if they become relevant, at least for now, support in that 328 area. And then moving over to Apple and Microsoft. Apple, another very strong day, nearly 1% there. Momentum back to bullish. RSI still super overbought. Continues to look very, very strong there. And then looking at Microsoft, close above the level there, 453.30. So first time we've been above that on a closing basis since all the way back here on the 10th of July, so continues to look strong. We talked about the break here, continuation to this level. Once it broke, we figured we were probably going here, and we have hit it back on the Thursday last week, and now we're continuing to be bullish, 0.64. At this point, your next level is the all-time high at 466.57, but it is back to overbought conditions at a 71.08 on the RSI. Momentum not really going with it, but price action still says bullish. These do look very similar. Apple continues to be stronger, but Microsoft moving with it. Moving over to Tesla and NVIDIA. Tesla continues to be incredibly strong, 3.64%, basically straight up. Everyone I've seen talking about Tesla at this point says it's probably going to 500, so I added the level 500 here. It's only about $20 higher. Seems to do that just about every day. $26, $16, $18. Seems like we're going to get there within the next trading day or two. Momentum still very bullish, incredibly high. RSI at 83.68. Massive run here on Tesla. Continues to look strong, breaking all the levels. And then you got some trend resistance up in the 580 area. We'll see. Probably going to touch 500 though. And then looking at NVIDIA, another gap down and fall, 1.22%. We did pull back right to the level after gapping below it. 144 EMA didn't quite get touched there. 126.28. Low of day was 126.86. Want to see it touch that level and find support if it's going to do it. That's generally where we found support before. Touch the level here, bounce from those zones. We haven't quite touched it. I would be patient, wait for the touch, and then see how the price reacts from there. Momentum still bearish, RSI still bearish, so definitely be patient. And then I have my level there, 124.69. We did get the gap fill back to that Monday, October 7th. Filled that closing price there. You still have a gap technically from the 2nd to the 3rd. So maybe we pull back to there, 119, 118 in here for the gap fill. That would get you dangerously close to that 200 as well at 115.75. Probably these are going to trend lower together as the price comes down into that zone, and then the 200 trends up into that zone, consolidates in here. Then we find the bounce if it's going to do it. So again, head and shoulders still looks bearish to me. It's currently broken down through the neckline, through the levels. Everything looks like it should go a little bit lower. Moving over to Amazon and Google, you can see Amazon down 0.76. Inside candle pulled back to the 9 EMA. Momentum still fading. RSI still chopping. It's grinding higher. My guess is this is going to pull back. Most of the Mag 7 is super extended, and this is no exception. And then looking at Google, hit these upper trend lines finally. We were watching this structure here, touched it here, back on 7 November, pulled back dramatically, rallied back up on the catalyst of their quantum chip announcement, touched this zone, and you can see big wick rejection, closed negative, about 0.5%. Not a good indicator in terms of potentially going higher from here, especially with how overbought we are. You have a little bit of divergence on RSI, momentum stepping down. It's very, very extended towards that upper levels of the range. My guess is we see at least a pullback in time, if not a pullback in price, maybe back to these previous highs in here, 183, 184, touch those levels and then catch a bounce and then push back up to here is a possibility. But short term, I would be taking profits in this area. Then looking at Meta and Broadcom, Meta continues to fall. We talked about this consolidation here. Took out the lows from the Friday session, momentum fading, RSI broken down at this point, volume ramping on that selling, 0.77. This is probably pulling back to the trend in here, 606. My level 602.95. Short-term pullback at least. 21 EMA sitting down there, 595. Want to see it hold in here if it's going to do it. Otherwise, if this breaks back into this consolidation, then you're going to have choppy action, fake out, breakout, choppy action, which then starts to look like distribution. But as long as it holds that higher low, then you're in good shape. And then looking at Broadcom, two massive candles off of their earnings. Finally saw just a slight pullback of around 4%. Momentum still super bullish. RSI still super extended. This is probably why we saw the NASDAQ pulling back as well. This has been a huge driver. Hit those upper trends, pulled back from that area. Inside candle. Usually that means you're going to see at least a little bit more pullback from here, but this catalyst has been crazy and I would be patient. But I absolutely would understand profit takers here after these absolutely massive moves, 24 and 11%. Sequentially. So big moves, super extended. And if Broadcom starts to fall, that could give markets a little bit more reason and catalyst to pull back. Moving over to staples and discretionary, staples pulling back, 0.17, nothing crazy, but continuing to show risk on markets. As staples pulls back and discretionary continues to bounce just slightly there, 0.31. The bigger concern here is the volume. You can see big selling volume, 79.87 on the RSI. Trend support in here, 235.95, 9 EMA, 234.44. Again, very, very extended, just like everything else, but continues to go higher seemingly every day. Even short-term pullbacks are short-lived, and then you get continuation higher. We'll see if this is another iteration. My guess is that this might be the culmination, but who knows? Wait for the price action. Want to see some pullbacks, want to see some structure break, and then you can start to get a little bit more bearish on it. And then for those bearish ones, we have transports and oil and gas continuing to go much, much lower. 0.73 and 0.66 respectively. Finally hitting some of those critical levels. You can see 69.29 was the level. We closed just barely above it. Back to these lows here. Momentum super bearish, RSI still super bearish, but this is a zone where it could hold support or at least give us a little bit of a bounce or a slight reprieve from this straight down price action that we've seen basically since 25 November. 200 is still sitting down there at 67.63, my level 67.85. Maybe this is where we end up going, but we're very extended already. Wouldn't shock me to see a pullback to the 21 up in the 72 area. And then looking at oil and gas, finally gap back to these lows here from the end of October. So you've now fully round tripped this move here. This is the zone where you would expect it to find some support if it's going to do it. I still have a level 127.99, which takes you back to this area here from the end of September. This has been a really choppy chart, so it's no surprise really that we did round trip this move fully. I thought we might hold a slightly higher low because we have been doing that from mid-September, beginning of October, and then here beginning of November. Very slightly higher highs here, but we fully round tripped it at this point. If it's going to hold in here, this is where you'd like to see it do it. Otherwise, you could see a break to these lower lows, 124, maybe 120 in here. Momentum still very bearish, but you did see some volume come through. And looking at that here, you can see big volume, green volume there on these critical levels after touching that critical support here that we did end up holding on the last one. I could absolutely see why some sellers would be taking profits and some buyers might be entering positions in here. Pretty tight stop, 127.99. If you get below it on a closing basis, we're probably going lower, but I could see it bouncing from here. Moving over to market breadth, absolutely terrible, down to a 20 on the 20-day breadth, another 21.7% lower. And then look at this 50-day, just continues to accelerate, absolutely massive, clean through that 40 level. We knew it was going to get touched there. We talked about it yesterday, but was it going to hold? We talked about how this was an interesting zone. Now we've touched the lows back here from the end of May time period, and right here, beginning of May, we ended up bouncing from that. The last time we saw any lower levels was back here in April of 24, back to that 26 level, and that's within striking range at this point. Momentum still very bearish. RSI super oversold on breadth at a 23.92. Is this the culmination point? Seems possible. 20-day breadth also there at a 27.65 on the RSI. Momentum continues to build, so we're not done quite yet, at least in my opinion. We'll see. But either way, market breadth showing much lower lows on both of these, which generally leads to lower prices over that 1 week to 1 month time period, just like we talked about before. And then looking at the 200-day breadth just for a moment, just wanted to highlight that this is continuing to break down here as well below these previous lows here and below that 62 level. We're right back to the lows from the beginning of August. We'll see if this zone ends up holding or not. That was the previous low really for the last year or so. You can see we got above this level December of last year. Now we're here again December of this year, nearly taking out all of these lows. This seems to be a bit of a structural change. The current trend support for me is down here in the 56 area. Momentum still very bearish. RSI oversold there at a 26.19. So breadth continues to fade as markets continue to hover or go sideways choppy. And I do think this is a short to medium term bearish signal, even if prices have not gone with it quite yet. Moving over to the dollar, you can see the dollar did pull back to the level 106.84, touched that level here, bouncing a little bit, touched it here, bouncing a little bit. So we'll see if this level continues to hold. As long as it does, that's bullish action. If it breaks back down below here, that's going to be bearish. You can see a slight step to bearish momentum touching that level. Needs to close below it if it's going to do it. That would give you a high, lower high here. Then you would be looking for at least a little bit of consolidation back in the 106.28 area, kind of in this mid zone here. But for now, as long as that continues to hold, that is where we're looking for it to bounce potentially back up to that 108 area, and then the trend in here 108.08. And then moving over to bonds, you have bonds down 0.18, and then TLT actually finding a little bit of support back in this previous consolidation. We said if it was going to do it, this was the zone here. You can see previous low. You have a still slightly higher low as well, which is bullish to me. You can see the low from this consolidation was back on the 18 November candle, and that was at the 89.42 level. We haven't gotten really anywhere near there, and we're already finding support momentum very close to swinging to the bull side. My guess is we see that bounce tomorrow, especially with the FOMC and the rate cut. This should see a little bit of bullish price action in there. So this is your opportunity to get back in on TLT, in my opinion. Big pullback, big gaps. These will probably get filled. We'll probably get that continuation into the 96.50 area. This was just the initial thrust, pullback, higher low setup, continuation, in my opinion. Moving over to volatility, you can see volatility had a big spike. You can see that here, 8.1% continuing to that 200 SMA at 15.89. Is it going to push through here back to the 1850 area? My guess is that it will. We've been talking about these higher lows, bullish price action, bullish momentum. It's above the 50. To me, again, spikes into here. That was the previous high. You can see that low action here before we bounced. Part of this is probably because of FOMC, but also price action has been a little bit weak. Either way, I still think this is going a little bit higher in the short term. Moving over to my accounts, I was down about 300 on the day, which is pretty much in line with markets. You can see the Russell down $2.76. I did roll that down and out to 233 for the 18th for $2.90 credit. Being patient on that one, despite the fact that it broke the levels, I ended up deciding to roll out and down. Want to be patient, roll out and down in time, trying to get a little bit lower here over the next couple days. I think we might see a little bit of a bounce on the Russell coming out of the FOMC. The small caps should benefit the most from that rate cut, obviously depending on the verbiage that we see there. And then looking at the Qs, I didn't do anything with this position. Still plenty of protection from this covered call. Nearly all of the losses there were covered, about $80, despite the fact that the NASDAQ was down $2.37. So would have been a $500 loss, ended up at about $80. So covered all of that. nearly perfectly. Still plenty of protection left, only $200 profit out of a potential $1,600 on that covered call. So in good shape as we head into the FOMC. If we see big rallies out of there, I'll probably adjust this up, but I want the protection as we get closer to those volatility events. Let me know down in the comment section what you think of the breadth movements and the sideways choppy action on the SPY as we head into FOMC. Is that going to be the catalyst for the breakdown, or is it going to push us to new record highs? Let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.